Welcome to the Byte-Size Brief. Today, we're putting Trump Media and Technology Group, that's DJT, completely under the microscope. Let's get into it.
Yeah, I'm really excited for this one. Because if you scan the global markets right now, DJT is just, well, it's one of the most polarizing and fascinating companies out there.
Oh, absolutely. I mean, imagine a company that brings in less revenue in an entire year than, like, a handful of busy fast food franchises, right?
Yeah.
But then imagine that exact same company has literally billions of dollars sitting in the bank, and they're actively trading massive crypto options contracts to pay the bills. Oh, and they also trying to build a commercial nuclear fusion power plant.
It sounds totally made up, like a glitch in the financial matrix.
It really does. And that's our mission today for you, our listeners. We are going to unpack this massive glaring disconnect between DJT's multi-billion-dollar valuation and its, well, microscopic revenue.
Yeah, and we'll map out how a pure play social media app somehow transformed into this sprawling crypto trading energy funding conglomerate.
Exactly. But before we dig into the SEC filings, I do want to give a quick disclaimer, because DJT is obviously rooted in a specific political movement.
Right, it's tied to Donald Trump.
Exactly. But our deep dive today is strictly financial and strategic. We aren't endorsing or criticizing any political viewpoints here. We are just impartially following the data, looking at the balance sheet, the market dynamics, and, the operational realities.
Yeah, just the hard numbers. So let's start with the foundation. Before all the nuclear reactors and hedge fund maneuvers, what is DJT actually operating right now?
Well, at its core, it's Truth Social, right? The microblogging platform. And they also recently launched Truth.A, which is their new streaming service. And the whole pitch to users is that it's a free speech safe harbor.
Right, that is the core premise. And honestly, the public markets have rewarded that premise with a truly staggering valuation. I mean, right now, DJT commands a market cap bouncing somewhere between $2.37 and $2.88 billion.
Wait, billion with a B for a platform that is still pretty new.
Yes.
With a B. 2.88 billion. But here is where the traditional math just completely breaks down. Their price to sales ratio, the PS ratio, which compares the market cap to their annual revenue, it exceeds 780x.
Wow. Okay, give us a benchmark for that.
Yeah.
Because that sounds high, but how high?
Oh, it's astronomical. I mean, if you look at mature tech giants like Meta or even alternative media peers like Rumble, they traded a tiny fraction of that multiple. Like a PS ratio of 10 or 15 is considered really high for traditional software.
And they are at 780.
Exactly. So that implies the stock is trading almost entirely on retail investor sentiment rather than, traditional tech valuation metrics.
So basically, it's kind of like investing in a cultural movement rather than a traditional software company.
Yeah, that's a perfect way to put it. There's a very strong moat driven by these cultural network effects. The user base is fiercely loyal. And, looking ahead, the 2026 midterms are acting as a massive upcoming catalyst.
Oh, right, because political engagement drives traffic. Exactly. For a platform indexed to politics, an election cycle is basically their primary engine for user engagement.
Okay, but user sentiment can only carry a balance sheet so far, right? At some point, an ad-supported business has to, actually sell ads. Okay, so compared to last quarter, what actually moved the needle here?
Well, honestly, if we look strictly at operations, the needle is practically frozen. For the fourth quarter of 2025, revenue came in at a mere $1.01 million.
Wait, $1 million in a whole 3-month quarter for a company valued at nearly $3 billion.
I know, it sounds crazy, but correct. And when you zoom out to the full year of 2025, total revenue was just $3.68 million. Year over year, that is a minuscule 1.8% growth rate.
Wow. Under 2% growth. So they are basically failing to scale their ad inventory. Or maybe corporate advertisers are just hesitant to spend on a polarized platform.
It's probably a mix of both. Monetizing a highly specific, politically charged user base is notoriously tough. Large brands usually want brand-safe, neutral environments, so you get this severe structural revenue stagnation.
Okay, so if revenue is stuck under $4 million for the year, what are the losses looking like?
The losses are immense. Net losses skyrocketed by 77.6% year over year, hitting a massive $712.06 million in 2025.
Hold on, how does it actually affect Trump Media and Technology Group, DJT's stock price for regular investors like me? Because if I see a company making $3 million but losing over $700 million, my first instinct is that bankruptcy is right around the corner.
Right, and that's a totally fair reaction. But we have to unpack that $712 million figure. Because not all losses on an income statement mean physical cash is leaving the bank.
Okay, so what is it then?
Well, out of that $712 million, about $403.2 million were non-cash losses, specifically related to changes in the fair value of their digital assets.
Okay, so we're talking about paper losses on crypto they are holding.
Precisely. It's mark-to-market accounting. If DJT holds a bunch of Bitcoin and the price drops exactly when the quarter ends, accounting rules say they have to record that drop as a loss, even though they didn't sell it.
Right, they didn't lose physical cash. It's just a snapshot of the paper value.
Exactly. So when you strip out those paper crypto losses, plus the heavy R&D for their streaming build-out and some merger costs, the day-to-day operational burn is more manageable.
But it still leaves us with a huge problem, right? The core business is making almost no money.
Yeah, the core social media platform is definitely not funding the operation.
Which brings us to, honestly, the most perplexing part of this entire story. If Truth Social is only pulling in $3.6 million and they're burning millions to run servers and pay engineers, where is the money actually coming from?
Okay, so this is where DJT stops looking like a tech company and starts looking like a specialized hedge fund. Because despite that massive net loss, DJT actually reported positive operating cash flow of $14.8 million for 2025.
What? That feels like financial magic. How do you flip a $700 million loss into positive cash flow?
Through a highly unusual and aggressive Bitcoin treasury hedging and covered put options strategy, they basically took their massive cash reserves and acted as an options underwriter.
Okay, let me make sure I understand the mechanics here because it's wild. Are you saying they're writing covered puts?
Yes, exactly.
So writing a put is essentially making a bet that the underlying asset won't crash. Like, if I have $1 billion and I write a put option on Bitcoin, I'm promising to buy Bitcoin at a specific price if it drops. And for taking on that risk, someone pays me a premium up front.
That is exactly how it works. DJT is leveraging their enormous balance sheet to harvest yield from the volatility of the crypto markets. They collect that premium, and as long as crypto doesn't violently crash and force them to buy at a bad price, they just pocket the cash.
Wow. So instead of making money selling ads, they are using their bank account to act like an insurance company for crypto traders.
Yep. And those premiums generated $44 million in pure cash proceeds last year.
So basically, it's kind of like a social media startup moonlighting as a crypto hedge fund to pay its bills.
Huh? Yes, that is literally what is happening. And this strategy, plus their retail fundraising, has totally transformed their balance sheet. At the end of 2024, they had $776.8 million in financial assets.
Okay.
By the close of 2025, that number had exploded to $2.5 billion.
A $2.5 billion war chest. That's insane capital flexibility for a company with almost zero ad revenue. And they aren't just sitting on that cash, right?
No, not at all. They are aggressively pivoting into fintech. They're building an alternative financial ecosystem called Truth.Fi. They already have $250 million custodied by Charles Schwab.
Wow.
Yeah, and they are launching ETFs, separately managed accounts, and even a digital token initiative with Crypto.com.
But I have to push back a little here. Relying on crypto volatility to fund your operations is incredibly risky. Like, what if we hit a crypto winter? Or volatility dries up and those premiums shrink?
Then that $44 million cash lifeline disappears. You hit the nail on the head. That is the existential threat. Ad revenue is sticky. Options premiums depend on macroeconomic forces outside DJT's control.
Right. And yet they're doubling down on even more massive high-risk bets. Which brings us to the nuclear fusion pivot.
Yes, the $6 billion all-stock merger with TAE Technologies.
I am still struggling to process this. A social media app is merging with a team of theoretical physicists trying to build a nuclear fusion reactor. Why?
It all comes down to the AI revolution. Training these massive language models takes an incomprehensible amount of electricity. Traditional utility grids are buckling. Wind and solar are too intermittent. Big tech desperately needs infinite clean baseload power.
And fusion is the holy grail. So DJT wants to build the world's first utility-scale fusion power plant.
Exactly. They want to own the energy infrastructure for the AI boom. And from TAE's perspective, fusion research takes billions of dollars. DJT has $2.5 billion in the bank and a direct pipeline to retail capital.
Okay, so it's a marriage of convenience. They're merging in mid-2026, and shareholders from both sides will own about 50% of the new combined entity.
Right. DJT gets a world-changing narrative, and TAE gets the funding to keep the lights on.
But the execution risk is stratospheric. Fusion is still largely experimental. No one has achieved commercial-scale net positive energy yet. And DJT has zero history running complex energy infrastructure.
Oh, the hurdles are immense. Navigating the Department of Energy, the Nuclear Regulatory Commission, it's a totally different universe than running a microblogging app.
Which perfectly transitions us into the key risks here. Because with DJT juggling a zero-growth ad business, a crypto hedge fund, and a nuclear reactor, what could unravel this?
Well, the biggest threat is what Wall Street calls key man risk. The entire DJT brand is inextricably tied to Donald Trump.
Right, and didn't he recently shift his shares around?
He did. In late 2024, he transferred his majority stake over 114 million shares to a revocable trust controlled by Donald Trump Jr.
Okay, but it's not just the shares, right? It's his political status and his criminal conviction in New York.
Exactly. Launching an app is one thing, but when you want to launch financial ETFs, build nuclear power plants, you face exhaustive background checks from federal regulators. Having a highly polarized figurehead with a conviction could severely delay those approvals.
And there are internal operational risks, too. I saw in their 2025 annual report, DJT actually admitted to material weaknesses in their financial reporting.
Yeah, that's a massive red flag. It means their independent auditors found significant flaws in how they track and report their data. For a newly public company managing a $2.5 billion balance sheet and trading complex crypto derivatives, that tells institutional investors the basic financial plumbing isn't fully reliable yet.
So putting this all together, you have a stagnant core business, crypto options propping up the balance sheet, a nuclear merger, regulatory risks, and accounting weaknesses. How do third-party analysts even put a price target on DJT?
They basically can't. The forecasts for 2026 range wildly from a bearish $4.88 all the way up to a bullish $13.87. It proves this is still a purely sentiment-driven stock. Functionally, even after its initial merger, it's still operating almost exactly like a SPAC.
Right. A special purpose acquisition company is just a massive pool of capital searching for a viable business model to justify its existence.
Precisely.
And that's the biggest takeaway for you listeners. The upside of successfully commercializing nuclear fusion or building a huge fintech system is astronomical. But the floor could be exceptionally low if the crypto market turns or regulations stall the fusion plan.
Yeah, because there just isn't a robust ad revenue stream to fall back on. But if you pull back, DJT is clearly trying to build an entirely parallel America-first economy.
Yeah, a fully vertically integrated ecosystem, a censorship-free feed for comms, alternative ETFs for wealth, and the literal nuclear grid to power it all.
It's an unprecedented strategy. We'll just have to see if this grand experiment succeeds or if it collapses under the weight of its own ambition.
All right, listeners, what's your take on the future of Trump Media and Technology Group, DJT? Are you bullish, bearish, or sitting on the fence? Let us know in the comments. See you next time on the Byte-Size Brief.